It looks like we're finally starting to turn the corner on this pandemic because we see the light at the end of the tunnel, but you gotta make sure you avoid this huge money trap once this pandemic is done. What's up everybody, I am Jaspreet Singh from the MinorityMindset.com, where money minds rethink rich. This pandemic has taken a real toll on people financially and emotionally, and I think a lot of people are really starting to feel that pandemic fatigue because people want to be able to just live their lives like normal again, because it feels like it's been forever since I've been able to go out to eat at a restaurant with my friends. It all started as this one big surprise because people in the United States were looking at countries around the world, in China and Italy, saying, wow, that's really crazy what's going on over there. Thank God we're okay in the United States. And then the next week, the United States went on full-on lockdown and everything shut down and people were told to stay in their homes. That's when the stock market tanked faster than ever, and millions of Americans saw their life savings and their investment accounts and their retirement accounts just fade away in the blink of an eye. Then because the economy shut down, businesses had no money to pay their employees, and so millions and millions and millions of Americans lost their jobs essentially overnight. And now you had a big chunk of America that's relying on unemployment checks just to be able to eat. People who checked all the boxes and had a good career and had everything going for them, all of a sudden had kind of everything crash in front of their eyes because now they lost their income, and now people were relying on the government to have money to be able to pay their bills. Once that initial shock of the pandemic went away and things started to chill out a little bit, that's when we had the crazy 2020 election. And then after all of that, we entered 2021 with an all-out financial war between hedge funds and regular people, with people trying to bid up stocks like GameStop and AMC, which were heavily shorted by hedge funds, to essentially stick it to the man and make hedge funds pay the price of all the bailouts that the government has given them in the past. It has been a crazy pandemic, and I know it's not done yet, but one thing's for certain is as soon as this is all done, we are gonna see a ton of movies created about the 2020 pandemic, so I'm kind of excited to watch that. But people are tired and fed up of not being able to live their lives, and so they're waiting for the minute that this pandemic will end, that way they can go out and splurge. 82% of America is waiting for the day that they get that vaccine stuck in their arm, so as soon as they get that vaccine, they can go out and start spending money and start living their lives again. One of the strange things that happened because of this pandemic is you had a big chunk of America that was making money. Maybe you were making money through unemployment, or maybe you kept working from home, but you didn't have anywhere to spend your money because restaurants were closed, or you didn't want to go out because of the pandemic and you couldn't hang out with your friends. And so people were making money, but they had nowhere to spend this money. And so when people had nowhere to spend this money, they just started putting this money in their bank account, or they started paying down their debt. And what we saw happen kind of as an indirect benefit from this pandemic, and I know that's a really weird thing to say because it's really hard to kind of imagine a benefit coming out of this crazy pandemic, but one of the indirect financial benefits that happened because of this pandemic is Americans started saving a lot of money. Like, Americans saved more than $1 trillion during the pandemic. I mean, I can tell you that from personal experience, since this pandemic started, I wasn't going on vacations, I wasn't going out to eat with my friends, I wasn't doing anything where I really spent money. The only thing that I really did was come here to make videos, and maybe I went to Chipotle a few times. That was it. So because I wasn't spending any money, my savings account grew. The thing that I'm worried about is people are getting ready for this big spending splurge because people have all this pent up demand and all this kind of pent up aggression and all this pent up money that's sitting there that they want to spend and go enjoy. And so people are just waiting for the day that this pandemic will end, where they can go out and they can just start spending money and start doing everything. Now look, that's great news for the economy because our economy has been hurting bad. And so the fact that you have all these people that are just waiting to go out and spend their money because they have all this money sitting there in their savings account, that's great for the economy because that means that hopefully this money is going to enter our economic circulation and companies are going to start making money again. And once they start making money again, hopefully they'll stop asking the government for more money. And once they start making more money through their own internal systems, hopefully they'll start reinvesting in their growth, hire more employees, and that will help the economy grow even more. But that's not so good news for consumers, because consumers for the first time have money in their savings accounts and they've been paying down their debt. That's a great combination for regular people, consumers. And now, if you feel like that you haven't had the opportunity to enjoy your life for so long, and so now you want to go out and spend all this money, well, then all this money that you ended up saving is going to go out. That might explain why the Federal Reserve Bank is working so hard to keep interest rates low for so long, because they want people to start spending money and start borrowing more money. That way they have more money to spend, because when interest rates are low, then you're more likely to go out and borrow money. You're more likely to go out and get a mortgage. You're more likely to go out and buy a car. You're more likely to go put money on your credit card. This is not good news for you, because now you're spending money that you don't have, but it's great news for the economy, because now you're borrowing money from the bank, making the bank rich, making these companies rich, and you get to borrow this money for cheap. And so the Fed is working really hard to keep interest rates low for as long as possible. That way, once this pandemic ends, you have this money and you can leverage it up and go buy all the things that you've been wanting to do. Now, I'm not saying don't enjoy your life and don't splurge a little bit and don't have any fun. I mean, I know that as soon as it's safe to do so, I'm going to go out to eat with my friends and I'm going to get myself a fat dinner. What I want you to understand is that you're going to see a big chunk of America blow all of their savings, and there are going to be winners and losers when this money pit happens. And you want to be one of the people that's on the winner side. And when I say winner side, that doesn't mean just keeping all of your money in savings. It means understanding how to use your money the right way. That way you can come out of this money pit a winner. Like, let's just think about this logically. If you have 80% of Americans that are waiting to splurge and waiting to spend their money, and you have interest rates that are dirt cheap, what's probably going to happen? Well, you're going to see a big chunk of Americans go and spend their money and maybe borrow money, maybe through their credit card or a line of credit or refinancing their mortgage. They're going to use this cash to go out and spend this money. Maybe they're going to go on a vacation. Maybe they're going to go out to eat. Maybe they're going to go shopping. And so this money is going to flow to certain companies. It's going to be the companies that are providing this value to people, because people have been waiting to go enjoy their life. So who's going to be the winner? Well, people are going to be the winner on the fun side of things, because they're going to finally start having fun and living their lives again. But when it comes to the financial winner, the winner are going to be the business owners, because then people are going to be spending more money at businesses, because the economy will hopefully open back up. And so people will be spending their money at businesses. They'll be flying again. They'll be going on vacation again. They'll be eating at restaurants again. And so these businesses will start making more money, because people are going to be spending more money. Now, just because you don't own a business doesn't mean you can't benefit from this, because you can use your money as a tool to own a piece of these businesses by investing in these businesses. That way, as these businesses make more money, so do you. I want you to be an asset owner and investor. Now, I'm not going to talk too much about stock market investing in this video. Our team has already put together an amazing guide that walks you through how to do that, what stock market investing is, how to do it, and how to find a good brokerage. So if you want to learn more about that, I will link that article for you in the description below. But essentially what you can do is, instead of spending all your money into this money pit, you can use some of your money as a tool. That way you can be an asset owner. You can be one of the people that's benefiting, because you can own a piece of the companies that are making the money. The way you can do that is by finding the companies or by finding the funds that you think this money is going to go to and owning a piece of it. Because now when the money starts flowing there, you benefit, because when these companies make more money, so do you. It's absolutely crucial that you understand this, because once this pandemic is over, we are going to see a bigger divide between the haves and the have-nots. Because the way the economy has been working, a lot of money has been printed, and this money has been printed into the economy. And who's been absorbing this money? The people that understand money, the haves, the people that are asset owners, the business owners, the people that understand where money is flowing and how money is flowing. And as more money is printed, the value of each dollar you have goes down. And so now, people have some money right now. That's good news. But as more and more people spend this money, because we have all this money being injected into our economy with stimulus checks and bailouts and all this money printing by the government, each dollar that people have, each dollar that people earn, each dollar that people save is not going to have as much buying power. And so if people are spending all their money at businesses, businesses are going to own a bigger percentage of the pie. And so the people that understand money are going to own a bigger chunk of the dollars out there. So what's going to happen? The people that don't understand money, they're going to be left with nothing. And now they're going to be poorer than before, because even if they have the same amount of money as before, the money that they have, the dollars that they have, is not going to stretch as far, and they're not going to have as much buying power as before. And so the people that don't understand money are going to have less buying power, and they're going to have less wealth, and they're going to be poorer. And the people that understand money are going to be able to attract more money, because they understand how the money system works, and they understand that there's more money in the economy. And so the people that understand money are going to own and control a bigger percentage of the pie. And so you're going to see a bigger divide in the economy, and you want to make sure you understand this going in. That way you're not on the losing side of the equation. This is where I need you to be smart and really understand how money works. That way you can use your money to your advantage and come out of this whole pandemic and this whole crisis a financial winner, instead of being one of the people that finally saved some money, that finally paid off their debt, and as soon as this pandemic is over, they're gonna start that cycle all over again where they run out of money because they wanted to splurge and they spend all their money, and then they rack up a whole bunch of credit card debt because they feel like they haven't been able to live their lives for so long, and then they're back right where they were before. You don't want to be one of those people, so be smart. Take care of your wealth first and then enjoy a little bit after. If you enjoyed this video, here's a video on investing your money that I think you'll love. While you're at it, subscribe to our YouTube channel and join our free finance and business newsletter. And as always, keep hustling. But in the long run, what really affects the stock's price is its fundamentals. That's how much money is the company making, how are their profits looking, are their revenues growing, are their profits growing, how is the management, and are they innovating for the future? So these are the things that really affect a company's stock price over the long term.